Hello and welcome to the Taxcast, the Tax Justice Network podcast. We're all about fixing our economies so they work for all of us. I'm Naomi Fowler. On the Taxcast this month, the story of when the US tax authorities, the IRS, decided to crack down on Microsoft, one of the world's biggest tech companies.
The only ones who benefit here are the big four tax advisors. In this case, tax advisors at KPMG. All of that was very lucrative for them. The downside was suffered by everyone else.
And before that, titanic power clashes seem to be the order of the day. There's been another historic vote at the United Nations, a landslide vote on how international tax rules are decided. This vote now pushes the world on to the next stage. Here's Alex Cobham of the Tax Justice Network.
Last week's vote at the United Nations was absolutely historic. The countries of the Global South came together and demanded that after 100 years in which the imperial powers or their successors at the OECD, the rich countries, have set the rules, that there should actually be a process at the UN to negotiate a convention on tax, international tax cooperation in particular, in which every country in the world will have an equal say, the right to participate fully. So it allows us to look forward to a position where we finally have a global tax body in which every country is represented. Now this is really important for the countries of the Global South, starting with the Africa group who've led this. These are the countries that lose the biggest share of their revenues each year to international tax abuse. And that international tax abuse is primarily caused by and facilitated by the rich countries, the members of the OECD and their dependent territories. But there's also a win here for those OECD countries themselves. They've insisted for so long on keeping the power at the OECD, and it's not just exclusionary there, it's also become completely ineffective. So the OECD members themselves lose, and all of us who are citizens of OECD countries too, of course, lose the greatest amount of revenues in absolute terms to that cross-border tax abuse by their own multinationals, by individuals hiding assets and income streams offshore. So for all of us, the negotiation of the UN Convention that will soon begin is an awesome opportunity to hold our governments to account. Instead of going behind the closed doors of the OECD, people said we'd never get anywhere at the United Nations, that we just had to deal with the fact the OECD was exclusionary and kind of structurally unjust and get the best that we could out of that. I think we've moved on, so let's celebrate just a little, and then the hard work begins.
Yeah, the last time the Global South countries tried to bring decision-making on tax rules to the United Nations was back in the 1970s. Now, 50 years later, they're mounting this existential challenge to global power. In next month's episode, we're going to bring you our analysis of the vote, the attempts by some nations to block it, and we're going to look at what happens next. Back to the largest audit in history. It's kind of a United States taxpayers versus Microsoft. And the story doesn't begin where you'd expect. This is the Anthem of Humacao. It's an absolutely beautiful location in Puerto Rico, about an hour's drive from the capital city of San Juan. It's got a 3,000-acre nature reserve, lots of beaches and a population of around 50,000 at the last count, not including all the tourists. It doesn't have an obvious connection to one of the world's biggest multinationals, Microsoft. But since 1989, Microsoft had a little facility there, employing about 85 people to burn Office and Windows software onto CDs. Microsoft had enjoyed a 15-year tax deal with Puerto Rico on this little factory, which guaranteed them a tax rate of 0 to 2%. Over the years, it saved them nearly $200 million in taxes. It's not a huge deal for such a big corporation, but it's nice if you can get it. That nice little 15-year deal was due to end in 2005, but a much more lucrative opportunity came up. This is business reporter at ProPublica, Paul Keel.
They were actually about to close the factory because there was no point in having it there anymore, when essentially KPMG, one of the big four consulting and auditing firms, came to them with a proposal and said, Puerto Rico is actually a great place to have a factory if you have some sort of IP transaction.
IP is intellectual property.
The idea of like a company like Microsoft selling its IP, its most valuable product, particularly to a small company in Puerto Rico, is ludicrous. And, these types of transactions are not unique to Microsoft by any means.
Indeed, they're not. Multinational companies use all sorts of tax strategies to shift their profits to tax havens, and they do it to the tune of an estimated $1 trillion a year. In Puerto Rico, 43% of the population lives in poverty. Not much benefit to be had for them with the Microsoft deal, except for a few jobs maybe. Anyway, this story's been running for a long time.
20 years. That's how old it is. It's a long time. It's like a child born, the same year as the transaction that's being audited is maybe in college now.
Anyway, KPMG's brilliant idea was for Microsoft to sell its intellectual property to this 85-person factory it owned in Humacao. This time, KPMG persuaded the Puerto Rican government to give Microsoft a tax rate of close to 0%. Microsoft shifted at least $39 billion in US profits there. The IRS auditors discovered what they believed was some mightily creative accounting, some laughable numbers in fact. Fast forward to 2023 and Microsoft announced the IRS had notified them that they owe $28.9 billion in back taxes plus penalties and interest. Microsoft disputes that.
And they're going to appeal, and that's going to take another good long time.
A very long time. It's a fascinating story. It should be made into a thriller movie someday. Honestly, the twists and turns, the arrogance of Microsoft, the determination of the attorneys working for the IRS. I mean, wow. Anyway, tax authorities don't often challenge multinationals in this way, even in the United States. So how did this even happen?
This is a time when the IRS was actually like relatively well funded around 2010. Obama's president. They have an IRS commissioner who says is going to make this a priority. And so they stand up this new unit that's going to audit these sort of transactions more capably. I think it's fair to say there had been some audits before that point, but they had not been particularly, aggressive in their posture towards how they're approaching the issue. And, clearly backfooted, like reacting as opposed to making any sort of stand. And so they hired a guy named Sam Maruco, who actually had been a lawyer in private practice. And he was sort of outspoken about the fact that, some of these transactions were clearly a kind of, he didn't use the word tax shelter, but essentially he's saying that's what they are. And that, the IRS had actually gotten on a little bit of a losing streak in auditing these transactions. And he thought the reason for that was that they weren't essentially going about the audits the right way. And he brought over another attorney from the firm he'd practiced at, named Eli Hoory, who was actually pretty young at that time, I think not that far out of law school. He'd done some work in the private sector. And, he also bought into that sort of idea. And so they were canvassing when they got there, 2010, 2011, for cases that they thought would be good, sort of like, let's stand our ground sort of cases.
So, they had this new unit. It was in the height of some serious money and political will directed at corporate tax abuse. So do you put all this kind of action, which was quite unusual in several different ways, down to political will? Was it public pressure? What do you think spurred that kind of setting up the unit, going quite aggressively after one big multinational?
Right. As for why this happened back in 2010, I think it was seen as having corporations pay their right amount of tax. These profit shifting to Ireland and all these other tax havens, that's not popular. People don't like that idea. There's not a lot of defenders of the principle, like why that's good policy. There was a lot of corporations on Capitol Hill saying, we follow the law as it's written, sort of thing. But so yeah, I don't know. Public pressure is quite the word for it, but I think it was seen as politically a positive idea, and that was why the IRS had the capital to do that. But I think it also comes down to the personalities of the people who were put in charge of the unit and decided to do things a certain way. Obviously, there wasn't the public was not clamoring for them to use these highly obscure tools that the IRS has, and nobody knows about that. It's their choice to decide how to carry out the mandate of, having corporations pay their appropriate amount of tax.
Yeah, I have found before that just a small, quite surprisingly small group of individuals can make a big difference in cases like this and in how tax authorities take action. But I mean, hiring a private corporate law firm to represent the agency, that I don't think that had happened before either, right?
No, it was the kind of a creative idea they had, which comes back to them being in private practice. And basically, frankly, they were not very impressed with the litigators that the government had at their disposal. And basically, we need winners. It's kind of the idea. And yes, there was a big freak out on Capitol Hill about that. And essentially they got into legislation that prevented it from happening going forward. I mean, obviously, it's not absolutely necessary for the IRS to have access to private litigators. What is necessary is for them to have capable litigators.
Yeah, it's fair to say as well that if an agency, a tax collection agency, can pay well, then they can retain arguably some of the best people. But I've found many times that you see a lot of people going to the other side because they can earn a lot more money and they're deploying those skills not for the public good, but for corporate good, I guess.
Right. Government salaries are not what you can earn in the private sector. So essentially it's not like they're paid poverty wages. You can get paid quite well by normal standards, but not by working for a big four accounting firm standards. So the pitch is always like a public service sort of pitch. Or if you want to be less public service oriented, there is value to having worked at the IRS if you want to go back in the private sector and, you can maybe get paid a little bit more because of that experience. So they are trying to staff up. It's going to take time.
So the reaction of the big tech companies to this challenge from the IRS was really, really strong. And they actually managed to lobby enough to get a change in the law restricting the ability of the IRS to use some of the same tactics in future. This reaction, in lots of ways, it shows you how these very big corporations will act as one when it's in their collective interest.
Right. Yeah. So, the lobbyist argument on Capitol Hill is never, we want to make sure that our big tech companies can send profits to tax havens. That's not the way they frame their argument. It's always, taxpayer rights. You don't want the IRS basically being unfair in how it audits people. So, this unit, that was one of their cases, and Microsoft was the big one. And so one of the tools they have is called a designated summons. And essentially what it is when a taxpayer is not being forthcoming with documents, they've not given them over in the typical process where the IRS asks for documents and they can stall or whatever. And then it's up to the IRS to sort of take a stand. It's kind of more conventional to issue a normal summons, which would just be you sue them in court and say, give me the documents. But the problem with that is the statute of limitations is still running. So you're going to, with the clock running out on you, it gives incentive to the taxpayer to, drag their feet a little bit. Designated summons stops the clock. So that takes away leverage that the taxpayer has in that situation, because instead of being able to run out the clock, they have to just sort of fight it out in court however long it takes. And that's essentially what happened in this case.
There's an internal appeals process where there's an independent private check on audit findings. Some call the Office of Appeals the gift shop, because complex transfer pricing audits looked at there end up reducing the amount of tax originally owed by about 81%. Microsoft was keen to move straight to that process for obvious reasons. The IRS tried to block that avenue and go straight to an open public court. No doubt they were cheered by frustrated IRS auditors everywhere who faced armies of corporate lawyers in other cases.
People who I spoke to were auditors often very frustrated with appeals, essentially giving cases away that took years to build. On the appeals side, they have this idea of they have to weigh the litigation hazard, which is they're saying how likely is the IRS to lose in court, and they would come to the conclusion we're probably not going to win. Maybe there's a 20% chance to win. Therefore, we'll mark down, the adjustment to 20% of what the IRS is wanting. Like that sort of logic. And so they're particularly worried about doing all this work, building this great case, and then appeals is like, well, transfer pricing case, we don't win, so we'll just give it away. So they sought to skip appeals, and that was one of the big things they fought over.
Microsoft won that particular boxing round and got its internal appeal. And from now on, new legislation will make it harder for the IRS on that front. That's because this huge lobby of tech and business groups lobbied hard. And to cut a long story short, a bill was passed into law, meaning the IRS will have to follow a new process if they want to block appeals or designate summons. And when they do, they'll have to report directly to Congress.
Lobbyists for the corporate world and for wealthy taxpayers are good at making arguments in a way that emphasize the taxpayer rights aspect of things. So you end up with bills that are called the Taxpayer Rights Act or that sort of thing, when oftentimes they're picking issues that really only affect the largest corporate taxpayers, but oftentimes they'll try to characterize them as hurting small business. So that's what you're up against if you're supportive of, more muscle behind tax administration.
However, in one of the big victories so far for the IRS in this long-running case, a judge agreed with the IRS's view on Microsoft's use of Puerto Rico. He wrote in his judgment, quote, "The court finds itself unable to escape the conclusion that a significant purpose, if not the sole purpose, of Microsoft's transactions was to avoid or evade federal income tax." Close quote. And he agreed with the IRS that documents from accountancy firm KPMG had to be turned over because they'd been promoting a tax shelter. And when you see these documents, you can see why Microsoft fought so hard to keep them confidential.
So there's privilege similar to this attorney-client privilege that an investigative agency can't get to or a litigant. Same thing with tax advice. But in cases where a court decides there's a tax shelter, those privileges get rolled back, and essentially that's what the IRS successfully argued in this case.
We know that these kinds of corporate tax games are zero-sum. Actually, more than that, this case shows they are a negative-sum game in which nobody really wins.
This is Zorka Millin of the Financial Accountability and Corporate Transparency Coalition.
So in this case, take the people of Puerto Rico, where Microsoft barely paid any taxes, and they didn't even create a meaningful number of jobs. And Puerto Rico, that it's one of the poorest parts of the U.S., and it's also increasingly hit by, climate impacts, like the tragic Hurricane Maria a few years ago. So, in Puerto Rico, disaster relief and other basic public services are desperately needed. And let's not forget the U.S. Treasury. I mean, the U.S. obviously suffered a gigantic, maybe even record-breaking revenue loss, which they're now trying to recover from Microsoft. And also, if we think about Microsoft's investors, they stand to lose. Certainly, if the IRS is successful, that would be a huge hit to the company's bottom line, even for a company that's as huge as Microsoft. And so really, the only ones who benefit here are the big four tax advisors. In this case, that would be the Microsoft tax advisors at KPMG who came up with this plan and managed to convince Microsoft's executives to go along with it. And they also negotiated the controversial tax holiday with Puerto Rico. All of that was very lucrative for them. There was no downside. The downside was suffered by everyone else.
Indeed. Like tax authorities in many nations, the IRS was financially undermined for years. Soon after coming into office, President Biden injected huge amounts of money. And with the Inflation Reduction Act, the IRA, more investment was promised.
The funding is very important for the effort to rebuild the IRS after over a decade of budget cuts.
This is Samantha Jacoby of the Centre on Budget and Policy Priorities.
The IRS budget, its sort of annual budget that it gets every year, is about 20% below what it was in 2010 after you adjust for inflation. So there was a sort of a deep hole that the IRS was in before the Inflation Reduction Act passed. And kind of the whole idea behind it was to get the IRS back to where it would have been without those cuts.
The Biden administration was estimating that this new IRS investment should raise $400 billion over the next 10 years. You know, if you look at what the IRS can do when it's very, very determined and you've got a lot of political will, and I'm just thinking about the Microsoft case at the moment, and I know that they're appealing, but it just shows that with the right amount of funding that comes from very strong political will and belief in the tax authority as a public good, it can achieve a lot of things for the public, right?
Yeah, so it is clear that with adequate funding that the IRS can take on some of these large, high impact cases and bring in a lot of revenue. And you mentioned the Treasury estimate on raising $400 billion in revenue. There are some academics out there who think that would be even higher, that return on investment would be even higher. There's a study that found that for every dollar the IRS spends on auditing very high income taxpayers, the government gets back $12 in revenue. So that's a huge return on investment, whereas audits of low and middle class households raise far less. And, you know, without those resources, it's clear that the IRS just doesn't have the capacity to take on those kinds of cases. The audit rates for millionaires and the largest corporations over the last 10 years fell by roughly 77% and 56% respectively from 2010 to 2017. And the reason that happens is tax returns of high income and high wealth people and large businesses they're so complex. Auditing them is labor and time intensive. And so without resources, without the sophisticated audit staff, the IRS just can't do it. They're just not equipped to sort of even identify those high impact cases, let alone pursue them and take on the corporation's sophisticated tax advisors in court. But even just a year into the Inflation Reduction Act funding taking effect, the IRS has already shown what it can do. The Microsoft case, of course, predated the IRA, but the IRS has been very effective so far in using the new funding, both to improve the services that it provides taxpayers, as well as its technology improvements and even making investments in enforcement. So in terms of customer service, they made huge improvements over the last filing season in terms of improving the level of service that they've provided to taxpayers, that people have been getting their calls answered more quickly. The IRS has opened new taxpayer service centers to help people file their returns. They've made big improvements in digitizing the tax return filing process. On the enforcement side, they've announced a big new initiative to audit partnerships. Partnerships, particularly large partnerships, are really, really difficult to audit. And the IRS has historically almost never audited large partnerships. The audit rate was practically zero. But they've announced that they're going to start using AI tools to identify partnerships for audit. And those types of entities include hedge funds, large real estate firms that are the really sophisticated entities that are able to sort of structure their businesses so that it's really difficult to unpack where their income is. And so that's one area we're seeing improvement already, just a year in. There's been efforts to pursue high income people who have not filed their taxes or failed to pay their tax debts. Those efforts are already starting to pay returns as well.
You'd think that's something all politicians could get behind, but sadly that's not the case. The Republicans are proposing to cut the vast majority of what remains of the $80 billion Inflation Reduction Act funding. Paul Keel again.
I mean, it was pretty apparent to me from the beginning that money would be under threat politically for the entirety of its life. And that's, what we're seeing now. I mean, the Republicans have tried, it's like a routine now, like every single bill, they try to take away money from the IRS. And, if we end up with an election where you have completely Republican controlled government, I think you have to expect them either gutting that pot of money or simply saying like the IRS gets no money, there are normal annual appropriations that are going out. They could just say like, you just use that pot of money to do that. We're not going to give any more. And that'll be a threat for the length of this bill. So it's unfortunately, the idea was to give the IRS this pot of money that couldn't be touched, and so that they could hire people with confidence. But it's given the political environment, it's kind of impossible to entirely accomplish that. So it's something that's going to unfortunately have to be watched going forward.
Samantha Jacoby.
It is very disappointing to see efforts to rescind that funding. For context, the IRS budget in 2023 was about $12 billion. So just that annual IRS budget would be cut by a significant amount. And then they would also rescind the vast majority of the long-term $80 billion in funding that Congress passed last year in the Inflation Reduction Act. So if those funding cuts were enacted, that would prevent the IRS from undertaking its planned rebuilding effort, just sort of full stop. It would cement in place the current depleted state of the IRS after a decade of cuts. And the result would be continued dysfunction, understaffing, declines in the number of audits of the wealthy and corporations on top of what we've already seen. It hasn't been passed yet, and President Biden would, of course, have to approve it. So we're still very optimistic that the IRS will retain most of its funding.
Oh, I hope so. I mean, can he veto it then as president?
Yeah, so the president has veto power over it, and so and the Senate Democrats are in control, and they've been supportive of IRS funding as well. So, but it's unclear where we'll end up, but there's good reason to think that the vast majority of the funding will stay in place.
Let's hope so. Meanwhile, pressure's building on multinationals themselves from shareholders and investors who want to see much more transparency on tax. Zorka Millin again.
In the last couple of years, we've seen increasing demand for tax transparency, in particular coming from investors in a number of major companies. And that includes big oil companies, Exxon, Chevron, ConocoPhillips. In all of those companies, Oxfam America has filed shareholder resolutions. And it also includes big tech companies. Notably, let me single out Microsoft itself. So at Microsoft, the shareholder resolution for country-by-country reporting will be put to a vote again at their upcoming AGM, which is taking place next month. When this happened last year at the AGM, this tax proposal was interesting. It actually had the greatest support out of any shareholder proposal that was put up for a vote last year. And so, it's clear we're seeing an upward trend here. And at this point, I would say really it's just a question of when and not if. And it's also, a question of whether it will come as a result of shareholder resolutions or maybe eventually we expect to see a more broadly applicable regulation that would come from the U.S. financial regulators, so the Securities and Exchange Commission.
And like so many of these messes we report on the Taxcast, things don't have to be this way.
Okay, just imagine a world in which Microsoft had published all of its country-by-country tax information for all of the relevant years here. Maybe they did it voluntarily, as, some other companies have actually already been doing for many years. Or maybe they did it because of a shareholder resolution that was successful. Or maybe they were just following the law, complying with a regulation that required all companies to provide this tax information. Whatever the reason, if that information was made public, then Microsoft's investors would have spotted right away the incredibly striking mismatch that exists between Microsoft's, pretty insignificant operations in Puerto Rico versus the many billions of dollars in tax profits that the company had booked in Puerto Rico. And that would be a major red flag. And I think that would most likely deter a company like Microsoft from engaging in such very aggressive tax dodging. So in that sense, tax transparency is like sunshine, as they say. It's the best disinfectant.
Currently, the situation is that under OECD rules, companies report the nature of some of the actual business they do country by country, but that system's really deficient in its current form, as Zorka Millin explains.
The OECD regime for country by country reporting, it is somewhat helpful. At least it's helpful to those tax officials from those governments who can access it. And it's important to note here that that doesn't include most global South countries. So, for them, it's not really helpful at all.
And many poorer nations need it the most because corporate tax is even more important to their tax base than in wealthy countries. There's another fundamental problem.
The larger point I would make here is that the OECD, it's not really a transparency regime. I think that's a misnomer because it's not public. So, I don't think we can call something that's not public. I don't think that's real transparency. And so it also means that this is of no use to investors. But, while we're waiting for regulatory action in the US and maybe also the UK, we actually already have some good news coming from Australia. We recently received a confirmation from a senior Australian government official from the Australian Treasury, Andrew Lee.
And here he is. Listen carefully, he's talking about public country-by-country reporting. Very different.
Australia is committed to public country-by-country reporting to hold large multinationals to account when it comes to their tax affairs. Country-by-country reporting is intended to shift behaviour in the way large multinationals disclose their tax information. It puts the onus on multinationals to be upfront about where they pay tax. Australia plans to start our public country-by-country reporting regime on the 1st of July 2024, aligning with the start date for the European Union's regime. Our aim is to be world-leading in country-by-country reporting, and we've consulted on it earlier this year. There's broad stakeholder interest, and we're considering feedback on compliance costs and alignment with other international standards. We want Australia's transparency commitments to be measured and targeted. It's about encouraging a race to the top in business productivity, not a race to the bottom in tax compliance.
This should be good news. We're cautious because the Australian government was on the point of passing this legislation in its parliament earlier this year with a comfortable majority, but it faced a tidal wave of opposition and lobbying and they delayed it. The OECD, along with many others, lobbied strongly to stop this legislation that would have delivered the biggest breakthrough ever on the taxes of multinational corporations. That proposed Australian legislation would have affected at least 1 in 5 of them around the world, and they'd have had to start publicly disclosing their profits and taxes. Zorka Millin again.
Australia plans to start its public, so true transparency, public country-by-country reporting next year, 2024. And that date, that's going to be a sea change in corporate tax transparency. And it will have major global impact that goes far beyond just Australia because the scope of the laws is such that it will cover many major multinationals. And we also hope that it will cover all of their global operations. So that will be a major moment next year.
It would make such a difference. So let's hope Australia is now back on track with its commitment to public country-by-country reporting. I had one last question for journalist Paul Keel of ProPublica, who's stuck with the Microsoft story for so long. In my job, where I'm trying to communicate these kind of long-term battles that are going on, trying to explain to people some of the things that go on behind closed doors, some things which seem quite boring in some ways and are not easy to explain or understand. I was just wondering what your take on it was, because you've been following this case and cases like this for a long time, such a long historical curve in a case like this. Just wondering about your thoughts on the capacity of media and journalists to reflect to people this type of very important case.
Right. I mean, it's complex and not complex. It's not complex in the sense that it's apparent Microsoft did a somewhat ridiculous transaction just to save a lot of taxes. So people can get that. I mean, I made an effort. I mean, I was writing my story. I did this big story back in 2020. That was for a general audience. And well, first of all, I think the secrecy around tax administration is one thing that is sort of a hindrance. Like, it's just really hard to write about this in a way that's engaging at all because there's so little public detail. And the only thing that made it possible for me to write that story was this fight that they had in court of this summit. And not only does that make a lot of stuff public that wouldn't otherwise be public, but also the IRS and the Department of Justice are making arguments to a district court judge who's not a tax judge. And so they're writing in a way that is geared towards a smart lay person as opposed to a tax judge. Like, if you read pleadings in tax court, I mean, I've covered this stuff for a while now. I'm not a tax lawyer. It takes a while to get through, like, what are they even saying here, right? Because they're just throwing statutes around and things like that. So it was only because this kind of rare case spilled into public view that I was able to write, a story that people could follow. A lot of times it just happens. You see the result. The only reason you see the result is if it's a public company, and they'll just say like what had happened, but they're allowed to keep those details quite secret. And that aspect has never really made a lot of sense to me, is you have public companies that are divulging all sorts of details to investors, but their taxes, they have a lot of leeway. Their taxes are secret, essentially. Their tax return is like sanctified. Like, you can't know that, but here's hundreds of pages of financials about this company. It's like sort of ridiculous. So I think that is actually another aspect of it, is there's so few stories to tell because everything is secret. So, I mean, but the idea is broadly popular of corporations paying more in tax, the rich paying more in tax, but the details are obscure to the point where it's hard to sort of engage the public on it, I think, is one big aspect of it. Microsoft, it's a big, complicated case. It's going to be an appeal, it's going to be private, it's going to be outside of the public eye. And then if Microsoft does not get the answer they want in appeals, then they will go to tax court, which is public. And that itself will take more time. So there's always more to be done, and you just have to fund the agency and hire capable people. Good things can happen.
Yes, they can. You've been listening to the Taxcast from the Tax Justice Network. Next month, we'll bring you a fly-on-the-wall, blow-by-blow account of that historic vote at the United Nations to completely change how global tax rules are decided. We'll look at the attempts to block it and the politics behind the votes for, against, and the abstentions. For more Taxcasts, go to www.thetaxcast.com. Thanks for listening. Bye for now.